Riley. I'm with Evergreen Pacific Mortgage, and I do a lot of work with Shane Persinger over at Key Realty. And Shane asked me to take a couple of minutes to just go over a financial strategy that the people I work with have been using all over the country to sell homes faster and at the highest possible price, using a creative financial strategy that most people have never heard of. So what this financial strategy does is it allows you as a seller the opportunity to build in the costs that you're likely to incur upon offer. In other words, when somebody brings you an offer, it's very likely that they are going to be asking you for some sort of price reduction. Just happens. In our market, appraisers look at listings to sales, and if they have to use what's called a listing comparable, a home that hasn't sold yet, they take a 5% cut right off the top of that listing comp, expecting that you're going to sell your home for about 95% of whatever you're asking for. Now, I'm not saying that's always the case, but we are in a soft market right now. There's a lot of listings out there. This is a strategy that allows you to look different, though, because, of course, if you look in the paper, if you look on multiple listing, everybody has a price reduction, whether it's stated as 10,000 below market or newly reduced by $20,000, whatever the case may be. Everybody uses that strategy. In our case, we're going to use a little different strategy, because instead of taking a price reduction, we're going to take some of that money, not necessarily all of what you'd have to spend, but some of that money, so that you're able to reduce the interest rate for the borrower, which allows them to substantially reduce their monthly payment and make it easier for them to buy. This has some real nice advantages over the traditional marketing strategy. First of all, you look a lot different to potential buyers. If everybody else is offering price reduction, and instead you're saying, hey, we're going to lower your interest rate, we're going to lower your payment for the entire life of the loan, at a bare minimum, you may have a buyer out there, or hopefully a whole lot of buyers, that at least want to take a look at your home over other comparable homes, because when they do that, they get the added advantage of knowing that they're going to get that interest rate. And keep in mind too that when we're talking about buying an interest rate down, these are people that started looking probably sometime in mid to late 2010. Now, if that's the case, they expected to get a 4% interest rate when they started shopping. After all, they saw rates go down and down and down, and they really thought they'd find a house. Well, almost overnight, at the beginning of December, rates went up 3/4 of a point, and they are likely to continue to move upward over the course of this year. Well, those people really feel like they missed out on a tremendous opportunity to get a better interest rate. And now you have the opportunity, you give them that opportunity back. So when it's marketed properly, we're able to show somebody, hey, you lost this and now we can give it back to you. And more of those people are going to watch or come to your house and look at your house because of that listing. You're going to get a lot more attention. Now, secondly, you're going to be able to increase the number of people that can afford your home. Obviously, if you do a price reduction, the monthly payment, let's give an example. Let's say that you had a $10,000 price reduction. Well, that's all well and good, but what that means to your buyer, first of all, they should be excited. They got a $10,000 price drop. But when they look at their monthly payment, the difference is going to be between $45 and $50 a month, depending on the interest rate. Not really exciting to them when they start looking at the monthly payment. And it's not going to help a lot more people be able to feel comfortable buying your home because of the monthly payment, nor cast a wider net, because 40 or 50 bucks, as a loan officer, I can manipulate that through the numbers to make that affordable for about anybody that qualifies in that range. Now, on the other side of the coin, though, if you took that same amount of money and you lowered their interest rate, the advantage you're going to have is that now, instead of the borrower saving $50 a month, they're going to save nearly $150 a month. Now, that's real money to most people. And the advantage you're going to have there is not only does somebody whose comfort level maybe is $1,400 a month, who couldn't afford your house because before it was $1,500 a month, now your payment's $1,350 a month and they feel very comfortable buying the home, right? Because we just reduced the monthly payment. Not only that, you don't need to make as much money to qualify for that $1,350 a month payment. So you're able to cast a wider marketing net. You're able to find those people that want to buy a little more house, but just can't quite get there. And now, because you've built this strategy in there, you've increased the number of buyers. And if you've done this at all before, you're going to realize that people always buy at the top end of their range. So you got a whole bunch of people that are going to be able to squeeze their way into your home that would have never had the opportunity to buy as nice a home as you have. Okay. The other the other thing you need to keep in mind too is that when you make the $10,000 or whatever the payment is in points versus price reduction is great, but if you pay that in points, that is most likely going to be tax deductible to your buyer as well. And believe me when I tell you, that's something that your listing agent is going to make sure that your buyer's agent tells those people. That if you offered, for example, a $10,000 price reduction like we've been talking about, or paid $10,000 in points, the $10,000 price reduction can't offer the benefit of any sort of tax deduction. But if you do it in points, that $10,000 is going to mean somewhere between $2,500 and $3,500 in real cash at the end of the year when your buyer does their taxes. Okay, when you make the payment, your buyer gets the tax deduction, and that's a huge negotiating point, especially when you're trying to mesh the contract together to make everything fit right. Okay, finally, what you can see is that it really costs less to offer the benefit, the same benefit to the buyer. Okay, if a $10,000 price reduction is only $50, and you can save $150 through manipulation of that thing in points, how much more in price reduction do you think you'd need to get to $150 a month? The answer is about $27,000. So for what you can do for $9,000 to $10,000, you would pay $27,000 in price reduction to achieve. So overall, this is a great strategy. People all over the country are using this strategy to sell more real estate, do it more effectively, and I appreciate you taking the time to watch this information. If you need more information, talk to Shane, give me a call, and more than happy to help in any way we can. I'm Jeff Nunley from Evergreen Pacific Mortgage, and thank you for taking the time.